Hello friends, welcome to my channel Important Points from Book. This video points from the book Rich Dad Poor Dad, and our topic is investment risky? I make this topic into two parts. First, mindset of investing, and second, two kinds of investor. First, mindset of investing. Robert Kiyosaki says the more you develop your financial intelligence, the more opportunities will be offered to you. His philosophy is to plant seeds in your asset column, start small and plant seeds. Some grow, some don't. Some grow into millions from little investment. Some say investment is a risky, but it's risk. But the more you develop your financial intelligence, the lower the risks become. The smarter you are, the better your chances of beating the odds. Most of the people aren't trained financially to recognize the opportunities in front of them. As you develop your financial IQ and begin to put it into practice, remember to have fun. When you learn the rules and the vocabulary of investing and begin to build your asset column, you think you will find that it's as fun a game as you ever play. Sometimes you win and sometimes you learn, but have fun. Most people never win because they are more afraid of losing. That is why he found school so silly. In school, we learn that mistakes are bad and we are punished for making them. If you look at the way humans are designed to learn, we learn by making mistakes. We learn to walk by falling down. If we never fell down, we would never walk. The same is true for learning to ride a bike. You have scars on your knees, but today you can ride a bike without thinking. The same is true for getting rich. Unfortunately, the main reason most people are not rich is because they are terrified of losing. Winners are not afraid of losing, but losers are. Failure is part of the process of success. People who avoid failure also avoid success. He said, you have to look at your money much like your game, like tennis. You play hard, make mistake. Correct, make more mistake. Correct and get better. If you lose the game, you reach across the net and shake your opponent's hand, smile and say, see you next Saturday. Second, two kinds of investors. The first and most common type is a person who buys a packaged investment. They call a retail outlet, such as a real estate company, a stockbroker, or a financial planner. And they buy something. It could be a mutual fund, stock, or bond. And the second type is an investor who creates investments. These are also known as professional investors. These investors knows how to put pieces of opportunities together, or they know people who knows how. It's important to learn how to put the pieces together because that is where the huge wins resides and sometimes some huge losses if the tide goes against you. If you want to be the second type of an investor, you need to develop three main skills. First, find an opportunity that everyone else misses. Second, raise money. Third, organize smart people. Let's see first. You see with your mind what others miss with their eyes. For example, a friend of Robert Kiyosaki bought a rundown old house. It was spooky to look at. Everyone wondered why he bought it. What he saw that other people did not was that the house came with 4 extra empty lots. After buying the house, he tore the house down and sold the 5 lots to a builder for 3 times what he paid for the entire package. He made $75,000 for 2 months of work. It's not a lot of money, but it sure beats minimum wage and it's not technically difficult. Second, raise money. The average person only goes to the bank. This second type of investor needs to know how to raise capital, and there are many ways that don't require a bank. To get started, you will learn how to buy houses without a bank. It's a learned skill of raising money. More than the houses themselves, it is priceless. But all too often, people say, the bank won't lend me money, or I don't have the money to buy it. If you want to be a type 2 investor, you need to learn how to do that, which stops most people. In other words, a majority of people let their lack of money stop them from making a deal. If you can avoid that obstacle, you will be millions ahead of those who don't learn those skills. Third, organize smart people. Intelligent people are those who work with or hire a person who is more intelligent than they are. When you need advice, make sure you choose your advisor wisely. There is a lot to learn, but the reward can be astronomical. If you do not want to learn those skills, then being a type 1 investor is highly recommended. It is what you know that is your greatest wealth. It is what you do not know that is your greatest risk. And IPFB point is, first, investment is risky for those who lack of investing knowledge as well as financial. Second, there is always risk, so you must learn to manage it rather than avoid it.